Welcome to Monday's Market Outlook here at Top Gun Options. Matthew Buckley. My call sign is Wiz, and man, that the end of last week just ended in an absolute train wreck. More for our country than anybody else, but also obviously the idiot Republicans, man. I mean, the Freedom Caucus. Great job, guys. Let's rearrange the deck chairs on the back of the Titanic. Trump, the biggest debrief I've ever seen this guy do, or the closest to ever saying the words "I was wrong," was in the midst of this debacle, saying, "Hey, I should have went for taxes first. At least I could have gotten some Democrats." And there is some bipartisan support, or actually, I should say, there was bipartisan support for tax relief. I mean, even the idiot Democrats know that, especially in the Republic of California, you squeeze the rich, you squeeze corporations, you hold on to them tight, they go elsewhere. So Democrats know to get some of this money back, they got to work with Trump. But them dancing all over Trump with the loss of fixing Obamacare looks so stupid. So I agree with what Trump said. You know what? I'm just going to step back from this whole thing. He could actually run up, on a hill outside of D.C., point to the Beltway and go, "They failed you, okay? I came to town. I couldn't even get the Republicans to work together." So I get it. It's a train wreck. It's a train wreck for Americans. Let Obamacare implode. Let all these people who went to all these town hall meetings and screamed at Republicans, let it implode. Let them get into a hurt locker and then go, "Oh, now you want our help?" So it's a joke, folks. But anyway, obviously that's going to throw into doubt Trump's overall agenda, right? In industrial spending, on infrastructure products, the tax reform, gutting financial regulation, all that stuff, folks. It's going to be a little bit of an uphill climb. So obviously, the Trump trade, bank shares, Goldman Sachs getting punished, JP Morgan getting punished. Great article in the Journal over the weekend, though, that says, hey, retail traders who kind of jump out when this stuff happens or try and time the market end up getting shellacked. So we don't do that here at TGO. Goldman Sachs at what, 220 or whatever we are right now, is a gift, just like JP Morgan. So 220 is back here in December. This is a 2016 level right now. Can it get all the way back to, break 200? Of course it can, folks. And we're going to load the boat on Goldman Sachs here and JP Morgan. He is going to get tax reform done, and he is going to gut financial regulation. If you guys think just for the next 3.5 years he's going to sit with his thumb somewhere tactical, you're wrong. And now that there's blood in the water, he's going to come after people. He's going to come after those Freedom Caucus folks in their primaries and actually vote for the other guy and suggest people vote for the other guy. So the guy, he knows how to go after people who wronged him, so to speak. But when they say, what is it? When you go and get revenge, you might as well dig 2 graves. It's not even worth it, but he's going to do it, folks. We're off our lows. I mean, we opened up, there was a 700-point swing, I think, from Friday's close to Monday's open, but we're only off. We reclaimed 100 points off this thing, folks, and starting to see a little bit of a turnaround in the market here. But we thought that at the end of last week. I got shellacked last week. First 2 weekly options losing trades in year to date. So ugly, don't like to see it, but take a look at our hedges. I have 2 SPX bear put spreads. One is up $1,000 right now. This is the April one. This was underwater by like $4,500 last week. Now it's up $1,000. And then this one out to May. This is definitely one I'd put on right here, folks. It's at this 2,300 level, which is absolutely critical for the market to hold. So right here, we're at this 50-day moving average. This is last week we talked about the 2350. Everybody was watching that implosion on, Ryan Kerr imploding. Now we're at the 50-day moving average. This is a key technical level, folks. If we break this, look out below. And that's why you have to have these hedges on. These hedges, let me analyze this one. Could potentially make 17 grand if the market rolls over hard on one, and 20 grand on this one. So these, and that's what, 9-10 grand worth of insurance. So 10 grand worth of insurance to get $35,000 in protection is the way I look at it. Maybe a third of my portfolio to protect a third of my portfolio. So that's just some rough math. And remember, as the market's going down, Disney, FXI, JP Morgan, XLF, this is the weekly options and the urgent alert model portfolio. We just sell front money month upside calls that are at the money. So even as things are sliding down and your neighbors are complaining that their 401ks or 201k, we're selling front month upside calls or at the money calls and bringing in some, a little bit of repair fund. So again, this is actually a healthy correction. Judgment time. Goldman sees 3 options for traders: get bearish S&P for a trade, don't fight the primary trend. This is a melt up, and here are good macro reasons behind it. Simplify the portfolio, wait for better location to reload strength. So that's what we're going to do. Actually, tomorrow morning, I'm going to do a joint weekly options and primary live trade brief at 10 because in about 38 minutes, I'm hosting the timing research traders roundtable. And I'll go ahead and throw that link on our Facebook page. So go to Top Gun Options on Facebook. Let me pull up my page here. And I'll put the link to our 1 o'clock webinar that I'm going to be hosting. Great roundtable, a bunch of 500-pound heads that I'm going to be hosting, and we'll see where everybody thinks the market's going this week. 50-day moving average is going to be critical, so I'll throw it right at the top here. And I'll throw the link to join the 1 o'clock at the top here. But this is it, man. This is critical. We're either looking out below, or we're gonna hold the 50-day and we're gonna bounce back, guys. If he doesn't get tax reform passed, it is over for him. He might as well pack up and leave. I mean, hell, put Pence in charge. Let's just let the Democrats and Republicans be politicians. And it was a defining moment. I'm going to cover this all tomorrow in the primary live trade brief. You guys will hear my political rant and what I think. But I'm not, again, folks, the model portfolio is taking some hits, but that's why we have bilge pumps. That's why we have hedges. And that's why we also, trade those at the money front month calls. Okay. If you want to join me tomorrow morning, head to our homepage and click beginner, intermediate, advanced. Let me know if you want to take a 2-week test flight, and you can hear my rant tomorrow morning and take a look at how we're going to add to some of our longs right now that I really like. Still like China, Brazil, Goldman Sachs, JP Morgan. We'll talk about oil tomorrow. Oil starting to push the market around a little bit as well. Goldman warns OPEC production cuts extension will backfire and result in lower prices. Why? They're not going to cut, and they're going to produce more because they're all a bunch of liars. It's comical the way the OPEC stuff works. But I got to run. I got to get ready for hosting my 1 o'clock. Again, I'll put the link to join us at 1 o'clock in my Facebook right now. By the time you're watching this video, it'll be up here, and I'll see many of you at 1 o'clock. So happy hunting. Make sure you hedge in this market, and I'll see many of you tomorrow morning at 10 a.m. for our joint weekly options and primary live trade brief. We'll see you.